Hello, and welcome to the Kase chat session on December 10th, 2014. My name is Dean Rogers, and I'm the Senior Analyst for Kase & Company. As we all know, trading's risky, so what we're doing here is just analysis. It's not advice, it's not consulting. Today we're going to talk about three different markets, the E-mini S&P 500, which we've looked at over the past few weeks, as well as Apple, because of some interesting things that are going on there, and then Microsoft Corporation, something that we tweeted out about yesterday. As usual, you can reach us on Twitter at Kasco. So if you have any securities that you'd like me to take a look at or do any analysis on, feel free to shoot us a message on Twitter or on StockTwits. My handle on StockTwits is PDeanRogers, like Paul Dean Rogers. You can also reach me directly, dean@kasco.com. Get a lot of information about our various services on StatWare.com and kasco.com. where we also actively blog and post these video chats every week. Alright, so let me go ahead and share out my screen here. And what we're seeing here is the move down that's taking place from 2079 to 2023 on the E-mini S&P 500. If you recall, about a week or two ago, we had talked about 2080 right in that area being a pretty important resistance level. Thought we might be able to get a little bit above that, but now we're starting to see this retracement back to the downside. If we look at it on a daily chart, it's pretty insignificant still. Got a long ways to go, and I would think that a normal correction would be something, right around the 21 or 38% retracement of this move up from 1813 to 2079. If we look at the intraday chart here, what we're really looking at, I'm going to look at a 3-point case bar chart. We're looking at that move down. Very easy to see that our primary wave is 2079, 2033, 2060. Now, I did quite a bit of analysis on this earlier this morning. And the largest and most important target that I had come up with, well, not largest and most important, but the initial target that I came up with is this 2030. Now, we're obviously below that at the end of the day here at 2023 and closing in on this 2018. And we look at the move down, when we look at that 2079, 2033, 25, 2060, 75, again, that's our largest wave. We've taken out the smaller than target, meaning that we should move to at least the equal to target of 2015. Now, we had a little bit of a recovery at the end of the day, but I wouldn't be too concerned about that unless it gets back above this 2049 swing high, which should be pretty darn close to the 62% retracement. Okay, a normal correction probably hold right in here, right around 2037.5. So I'll look for that maybe to hold in early trading tomorrow. We'll see if it can hold tonight or what happens tomorrow morning. But the area that I'd really be watching is this 2046 going into tomorrow. If it can hold that, then it has a good shot at extending down to that at least that 2015 target here. And if it breaks that, we're looking at 1997 and then right around this 1986, which on the retracements is right around the 38% retracement. So, we're sitting right on the 21% retracement of the move up from 1813 to 2079 right now. The 21% retracement was 2023. Our swing low today was 2023.25. So we've already had a 21% retracement of the entire move up. So technically, this correction could already be complete. But right now, I'm thinking it's going to extend a little bit more. I think this is profit taking at the end of the day here. And we're probably going to see it move down towards this 1982-ish area. 1978 is the target here, the 38%, and then 1986 is the larger than target. That really would be a good normal correction. So when it gets down towards that 1986, really, down towards the 82 level, I'm going to be looking right around this 1982. I'm going to be looking for a potential move back up, maybe getting in back long. If it breaks that 1982, we could get an extended correction down to this 1939, which is the trend terminus next C projection for this primary wave down. As this plays out over the next few weeks, we'll continue to cover it more than likely and see how it plays out. But right now, I'm looking for it to extend to at least 2015. If it breaks that, we're looking for 1977, and then the major target's going to be 1982. All right, so 1982. So if you're a short-term trader right now, taking short trades is probably going to be a pretty good deal. If it gets above this 2046 level, then you're going to really need to start looking for this 2060. 75 swing high to be overcome. I would say that the move down is over once it takes out this 2060 75 swing high, and at that point I'd be looking to get long again and scaling my long trades, if I'm not already long by that point, back up to my longer bar lengths and higher time frames where I'm willing to take more risk. Longer term, our objectives are pretty much the same as they have been for the last few weeks. I adjust these week to week as we get new wave formations, but the longer term analysis, we're really looking at once it can get back up above this 2070.59. That was the initial target this morning. That's changed a little bit, but the next target, 2089, that was one of the levels that we were looking at last week. 2112, 2200, and then 2215. Those are longer term numbers. This 2112 is really important, but 2215 is the key level because it's also the larger than target for the first wave up from the low that was made back in 09. Next, we're going to go ahead and take a look at Apple. Apple is interesting because going back into early October, I had sent out a tweet and done some analysis where I was looking at this coiling formation that we saw here back around that time, and the market broke a little bit lower. I was calling for it to break higher. It broke lower first, but then we formed this bullish divergence, got our buy signal, and the major target was 108.76. We can see how the market stalled at that point for a few days, almost a little over a week, before it broke higher again, gave us a good confirming first class buy signal on StatWare on the daily chart, and continued to move up until it met our resistance level at 120. We had talked about 120.10 as pretty confluent and important resistance. And then we've gotten two confirming sell signals. We had our first sell signal here, confirming short a little bit later. Last week we talked about the market holding the 62% retracement of this move down, and we've continued to move down. But this is a great example of resistance becoming support. Okay, remember that 108.76 target that we had projected way back in October. That's where it stalled. That was obviously an important resistance level. Not huge, but it was important enough that the market stalled at that point, gathered itself before it broke higher again. Now we're coming down. We've stalled just above that, or just right above. The low yesterday was 109.35, which is just above this 108.76. The primary wave that I want to look at is going to be coming down from the 119.75 down to the 111.27 to 117.20. That is this move down here. So from the 119.75 down to the 111.27, that's going to be this swing low here, and then the retracement high of 117.20. When we look at that, we've already taken out the smaller than target. The equal to target is 108.70. That is right around our 108.76 level. So we know that that is a potential stalling point for this move down. Now, I don't like the fact that today made a new high but then closed lower and closed below or right around yesterday's midpoint of the open close range. That's not a real good sign. So I do think that we're going to see it test and challenge this 108.70 again here within the next few days. If it breaks that, we've got this 105.50 target, but that wasn't real confluent. The real key point is going to be right around $104. And that's right here, because that is the larger than target of the 1.618 projection and the equal to for the entire move down from 119.75 to the 109.35 back up to 114.85. These are right now very important waves that are showing this confluence and the connection between right around 108.60, which is the smaller than and equal to here, and then the equal to and larger than at 104. And if it breaks that, then we're really looking at a move down towards 100.5. And if we look at the retracements of the move up from 95.18, now 95.18 is actually, let's go to the daily chart, which is working, and we'll throw on Kase swing 2. 95.18 is our last major swing low where that bullish divergence took place right before this strong move up. So I'm particularly interested in the retracements of that move. I'm looking at right now, we've already met the 38% retracement right around 110. So we've already had a normal correction. Again, right around that 108.70 is going to be really important, because if it can hold that, overcome this 117.26 high, 117.20 swing high, then we've got a nice move in the opposite direction taking place move down, correction is probably over at that point. But until then, my bias, at least near term, my long-term bias for Apple is positive still, but my near-term bias over the next few weeks until we see a move above that 117.20 is negative. And 108.70 is going to be a major support point, but once it breaks that, there's our 104, which is right around the 62% retracement of the move up from 95.18. So that's going to be another major point. I don't think Apple will move a lot lower than 104 unless something really drastic and major happens, some sort of breaking news fundamentally that really shifts the bias. I think right now this is just a correction, an overdue one, and some profit taking. I do think the support will hold. Again, 108.70 right in that area is important. If it can't hold that, then we're probably going to be looking for somewhere right around this 104.50 or no lower than this 104.50. If it breaks that, the move up is really in trouble. You could see a much more significant correction over the longer term for Apple at that point. So 104 is a very, very important point. Longer term targets, I kind of broke this up into two pieces. 116 is going to be a very near term support or resistance. 117.20, I don't have it listed here, but 117.20 is important because it's the previous swing high. And then 118.50. Once it overcomes the 118.50, you're really looking at a strong bias back to the upside. And even once it overcomes 116, I would be confident in saying that the move down is over. The 117.20 swing high being overcome would confirm that. And once you do that, then you're really looking at this 121.70 as one of your next major targets, 124.90, and then the most confluent projection is 128.40. Let me zoom in a little bit on those. Now, this is really where the connection is made for the longer term between this 124.90 and the 128.40. And that's because if you look at these wave formations, the move up from 95.18 to 119.75, the smaller than projection is 124.50, okay, or 124.90 right there. And that connects up to the equal to at this 133. So your kind of go-between price there is this 128.40. And that 128.40 is significant for the move up, the very first wave up from 95.18 to the 109.90. It's also significant for the subsequent wave up from 107.72. And then it's the highest that this, and this was as of this morning, this 109.35, 114.85, 112.76 wave projected. That wave is likely changed at this point, but that was the connection price. So once it can get above this 124.90, you're really looking at moving to 128, which is an intermediary target. Even though it's the most confluent, it makes its connection to 133 and then the 143. Now 143 is the area, or really I think I have it as 143.90, 144, let's call it. That's the most significant level because that's the equal to target for this long-term move up from the swing low of 11.17. So if we look at a monthly chart, that 11.17 up to 100.72, that equal to projection is 144.60. Okay, right around our $144 target within a plus or minus 65-cent range. That's going to be huge. It's a huge, huge number. That will probably be a very, very strong long-term resistance level. I'm not calling for 144 anytime in the near term. This could be something that takes place over the next couple of weeks, months, maybe even over the next year to get up towards that 144. But once it does, you're really looking at a fairly significant correction that could take place from that point. So that's going to be an area to watch longer term. All right. And the connections up to that are made through the 124.50 to the 133.90, 144. All right. And the earlier waves, the 116 and the 118, connect up to that 121, and so on and so forth. All right. So we have our clear connections longer term. These numbers will change over time, but that 144 will remain. Okay. That's going to be very, very important. All right, finally, the last one that we're going to go over here, last equity that we're going to go over here, or security, is Microsoft. And Microsoft has been really interesting because Ms. Kase was doing some analysis yesterday, and she was looking at it, and she was looking at the weekly chart. We're getting ready to do a webinar with NinjaTrader in January, so I will be talking about that over the next couple of weeks for those that are interested in attending. We're going to be talking about StatWare and Kase. But one of the things that we had here was a major bearish divergence. Actually, if we adjust these settings in the KCD, it would be a double divergence and a peak out on the weekly chart, which is significant. Now, we've had quite a few divergences and peak outs all the way along, but this one actually is a confirmed peak out, which is why it's green rather than the gray. A strong peak out as well as a strong divergence, and then we have the subsequent move down. Now, on the daily chart, we've already gotten short if we're trading the daily, and we've had confirming sell signals on this move back down. We did have a buy here, but it was a first buy signal, not very significant. Okay, and right now, so we're looking at this primary move down from the 50.05 swing high. And if we go back into this chart here, we look at this weekly, or actually, we can even go to the monthly to show this. What's really interesting is this wave here, this 1487, long overdue for a correction. This market has recovered all the way to $50, which coincidentally is a very important resistance level for a potential 5-wave move up from 1487. If you look at this 1487 up to 3158 down to 2273 as wave 1, and then up from 2273 to 50.05 as wave 3, that would mean that we get a corrective wave 4 and then ultimately a longer term wave 5. So longer term bias for Microsoft is bullish, but in the short run we have the potential for a fairly significant correction that was initially triggered by those weekly and daily divergences, peak outs, and short signals. $50, $49.80. Okay, if we look at that 1487, 3158, 2273, this is the wave that we had labeled as 1 of 5 on that monthly chart. Okay, right here. I have it labeled as wave 1 of 5, 1487, 3158, 2273. When I look at that, the larger than or 1.618 projection is 49.80. That's huge. That really indicates that if this is going to truly be a 5-wave formation, if the long-term bias is bullish, we should see a fairly significant correction and a wave 4 form now or in the very near term. Longer term, the XC projection is 68.90, so that's our long-term objective. The trend terminus is 142, which is, out of the realms of anything reasonable at this point. But this $69 level is pretty interesting because it's also fairly confluent for a lot of the other subwaves up from that 1487 and the 2273. How low can this correction go? That's the key question right now. And if we look at the move down, again, this was analysis that I did a little bit earlier today, down from 50.05 to 47.28, 49.06. We've already gone below the 47.40 smaller than target, which means we should see at least 46.30, which so far, if we go back into our daily, our low on the day-to-day was 46.70. So we have come pretty darn close to meeting that 46.30 target already, right around that area. 46.11 is the midpoint. If it can break that, then we're probably looking at a move down towards 45.20, and really the more important target is going to be right around 44.60. That's the larger than target. If it can break that, then we should see 41.40. So at this point, we're coming really close to some important support right around that equal to target at 46.30. And if it breaks that, I'd be looking for at least this 44.60. And if we look at the retracements of the move up from the 42.10 swing low, you can see that there's that 46, right around the 46.30, maybe a little lower than that. Our confluence point is 46.11. So we're looking at that as the 50% retracement, and then that $45 area, which is right around the intermediate target and pretty close to the larger than target, as being the 62% retracement of this most recent move up. And then the 89% retracement of that move is right here, right around 43. Now the important point about that is it's also the 62% retracement from 38.51, and most importantly, it's the 21% retracement from 14.87. Now if realistically we're looking at this move down from 50 as being wave 4, we should see at least a 21% retracement from 1487. If we look at our monthly chart again and look at the bottom of wave 2, which is 2273, that's really the 38% retracement I'm most interested in. And so 2273, the 38% retracement there, is right around 3970 or so. So I'd be looking for something, on this retracement, if it can break that whole $45 area, which we've got a lot of confluence there, right around 45, as far as the retracements and the 62% the projections. If it can break that $45 area on a sustained closing basis, meaning close below that for at least a few days, or like on the weekly chart, close a week below that $45, really good shot at that point of moving down towards at least 42.60, but I really like this $40 target as the potential bottom for wave 4, and at that point I'd look for signs of life and for the market to try to start to recover from there. Now this isn't anything that's going to take place in the next few days. It could take another week, 2 weeks or more, but it does look like, and it could even take a few months if it starts meandering in a sideways trading range and forming something longer term, like some sort of bullish flag or pennant, which could very well be the case, because this correction, at least the initial part of this correction, was fairly simple. If you look at that as an extended correction, it may have been some sort of coil or complex correction that ultimately broke higher. So if the rule of alternation comes into play here, dependent upon how you view wave 2, whether or not it was simple or complex. I look at this as a complex correction. I would really look at probably a simple correction and a fairly quick correction down right now, which with all the fundamental factors and everything else, seems to make sense. So you could see a 1, 2, 3 month decline, maybe to move down towards that $40 area, and then that would be wave 4. See it recover from there. Of course, our targets are going to adjust and change over time, but one of the targets that's going to remain longer term is going to be that $69 level, which was the XC projection for wave 1. And then we'll have to see, whenever wave 4 forms, what the smaller than and equal to targets for wave 3 will be, because if those coincide with this $69 area, that would be very interesting. All right, so again, if you guys have any questions, comments, concerns, feel free to email me. My email address is dean@casco.com. You can also follow us on Twitter, @Casco is our Twitter handle, and you can follow me on StockTwits. My StockTwits handle is P Dean Rogers, so like Paul Dean Rogers, P Dean Rogers, Rogers. And thank you for attending. Have a good day.